Hello, everybody. Hope you all are doing really well. Yes, please confirm me on the chat box if I am audible and visible clearly or not. थोड़ा सा better, a little bit of better sound might be coming because I have just connected the mic. Yes, so very good evening. Please confirm me if I am audible and visible clearly or not. Yes, very good evening, very good evening, very good evening. Yes, very good evening, very good evening. Thank you, thank you, thank you. So very good evening everybody. Hope you all are doing really well. My name is Supreet Agrawal and I'm your faculty for ACCA AA, AAA and law subjects. And my dear friends, today is going to be a very important session because today we are going to discuss about how do we write the answers for audit procedures. And this session is particularly important for everybody, be it a AA student or a AAA student. This session is going to be very important for you because in this particular session we are going to discuss about all the key factors that you should inculcate, that you should incorporate in your answers to gain marks for the audit procedures questions. And my dear friends, this question is not just about the audit procedure question, is not just about gaining the marks. It is one of the core questions, core concepts that every person who is going to appear for AA and AAA should score full marks in, because it needs a complete strategy. You know, when I talk to a lot of students, they say that whenever we write the answer for audit procedure, we personally feel that the audit procedure answers are more of the memorization answers. That is, you have to remember the memory techniques that has been taught to you, or you need to remember the exact answers that is there in the suggested answer. But let me tell you that today I'm going to teach you a strategy that is going to help you a lot while drafting your audit procedure answers. And my dear friends, let me tell you for this particular thing very clearly that after watching this video, I'm very sure that you will be able to gain full marks in your AA and AAA audit procedures answers. So let's just divide this particular discussion in two parts. Number one being what we need to cover. Okay, what should be covered, that should be the first point. Okay, what should be covered in your answers, and second, how it should be covered, how it should be covered. Okay, so to answer this particular question, let me take you to a concept that we have already covered a lot of times in our basics as well, in a lot of discussions that we have done for AA and AAA. Okay, so when we talk about what should be covered, so the answer is the assertions. What should be covered? The assertions should be covered. Whenever we try to draft any answer for the audit procedure, the best way to start is to try to cover as much as assertions as you can for that particular item. So what are the assertions, sir? Let's take certain examples. Existence and occurrence. Okay. Then measurement and valuation. Okay. Then rights and obligations. Rights and obligations, that could be one. What else could be there? Rights and obligations. What else could be there? What else could be the rights and obligations? What else could be there? Presentation and disclosure. Completeness. Cutoff. Accuracy. All of that are audit procedures, right? And some students write classifications as well. A lot of them forget, but some students are able to write classification as well, right? All of this is very important. Now, how it should be covered? Let me tell you how it should be covered. It should be covered via procedures. So what are the procedures that we have discussed? So the procedures that we have discussed is ACCA AOR, as in inquiry, confirmation, analytical procedures, inspection, observation, recalculation, and what is this? Recalculation and anybody? Yes, recalculation and anybody? Anybody? Recalculation and anybody? Yes, anybody? Recalculation and nobody knows. Oh my god, reperformance, right? So why have you written these things? We have already covered all of this in our basics lecture also. Why you have written all of this right here? Let me tell you, my dear friends. No, not review, reperformance. Now, when we talk about these particular things, so these are the things that helps us decide that how we will be discussing about the audit procedures. Now, let me give you an example here and then we will move further. Let's take an example of, say, tangible fixed assets. Tangible fixed assets, a lot of you might know it as PP&E also, right? Let's take this example and let's try to understand how we will be writing the audit procedures answers for this. Now, if we complete this, then we can understand that, okay, this is how we need to write the answers for one particular item of the financial statements, and then we can redraft it for the other items also. Correct? Right? So let's try to answer it. Now, assertion by assertion. Okay, assertion by assertion. Let's take these assertions only: existence and occurrence, measurement and valuation. So let's take about existence. Let's talk about existence and occurrence. Let's talk about existence and occurrence. How will you test that whether the asset actually exists and whether the transaction related to the particular asset, say depreciation, say repair, has actually occurred or not? So let me tell you. You know what you'll do? You will physically inspect or verify the physical verification report, correct? That would be your first procedure. Now let's talk about something else. Let's go to the second point. Okay, I'm just taking basic points now. Measurement and valuation. How will you ensure that the measurement and valuation is correct or not? So test the additions to ensure appropriate amount has been capitalized or not, whether there is any expense that should not have been capitalized but has been capitalized, right? Then whether the classification, the movement is appropriate or not. As of now, I'm taking just one example for each assertion. Okay, then rights and obligations. How will you ensure rights and obligations? So you will confirm in case of third party, or let me write it this way, assets kept with third party. So if your assets are kept with third party, you will obtain a confirmation, right? That could be one point. You will be verifying supporting documents to ensure title, that is whether the company has the title to the assets that they have shown in their balance sheet, correct? That is one important point right over here. Okay, after this, let's talk about presentation and disclosure. Presentation and disclosure. So what you will do? You will inquire with the management whether all relevant disclosures given or not. Plus you will test it also, but you will inquire also, right? Okay, then cutoff as in test if additions are recorded in the correct accounting period or not, right? I'm just writing very basic answers as of now, right? Without any reference to any case study or any particular data. Okay. Then there is accuracy and classification. Accuracy and classification. Test if all information is disclosed appropriately or not, and whether assets are correctly classified or not. Assets are correctly classified or not, right? This is important. Okay, sir. After this, we have covered almost all assertions, right? But did we cover inquiry? Yes. Did we cover confirmation? Yes. Did we cover analytical procedures also? Yes, we have covered analytical procedures also. Did we cover inspection also? Yes. Did we cover observation? No. So where you can input this point, observe the physical verification if it is happening there. Then we can calculate we can perform the recalculation also. Recalculation of depreciation could be there. And then reperformance, so reperformance of a walkthrough of an internal controls related to the property, plant and equipment, whether all controls related to the property, plant and equipment are working effectively or operating effectively or not, right? So with this you can see that we have written almost 5-7 points, plus we have added 2-3 more points also. So approximately 8 to 10 points we can write for any particular item. And if you write the answers this way, that is by merging the assertions and by merging the procedures to those assertions, then you will be able to write a wholesome answer for any questions of audit procedures. Is this method correct? Yes. Do you understand this method? Yes. Do you understand this method? Tell me, I can read your chats. Tell me, do you understand this method? Are you able to understand it? Yes. Are you able to understand it? So will this method be applicable for AA as well as AAA answers? Yes. But in case of AAA, you will have to give more references to the relevant ISs, to the relevant IFRS, to the relevant IAS also, right? In case of AA, you can write a little bit of simplistic answer also. That is the only difference. Plus, the item that you will be required to test in case of AA and AAA could be different. Say in case of AA, it could be tangible fixed asset, but in case of AAA, the chances are there would be more technical items like financial instruments could be asked, like revenue records could be asked, like testing of deferred revenue could be asked. So that is the core difference. Hope this is clearly understandable. Yes. So now I am uploading this video only for the purpose that you guys gain a good confidence over the audit procedures question, because every attempt I receive this query, sir, how do we write the answers for audit procedures? Is there any particular way? Is there any particular trick? So that is why I have created this particular video for all of you. Understood this? Yes. Perfect. So thank you so much. If you understood this concept, if you liked this video, do hit the like button and do subscribe to this channel so that we can connect for more such videos, for more such tips and tricks. I'm going to bring a lot of tips and tricks for AA as well as AAA going forward. Yes. Perfect. Okay. Perfect. Yes. So now we will be going for a discussion of question related to AA. Okay. So now we will start with a question on AA. So now let's start with a question of audit procedures related to AA. So when we talk about AA as a syllabus, we have already completed chapter number 19, 20 and 21 in our last discussion. Today we have to take up 22 to 27, that is non-current assets, then inventory, then external confirmations, receivables and sales, share capital, reserves and directors remuneration, bank and cash, liabilities, provisions and contingencies, and we have to cover the questions for each one of them, right? This is very important for all of us to understand. Okay, so sir, when we talk about the questions, we can see that for non-current assets there is only 3 pager, right? 3 pages. Okay, 169 to 223, that's huge, but 3 pages. Inventory roughly 12 pages. Okay, then here roughly 8 pages, then here 3 pages or 4 pages, let me say, right? 4 pages, here 10 pages, and here 12 pages, right? That is how the distribution has been done. We will start line by line only, but we'll need at least 2 sessions to cover it. We will need at least 2 sessions to cover it. It cannot be completed in one session only. We'll need at least 2 sessions to cover it. Okay, so now when we talk about the current non-current assets, let's jump into it. 169, 172, 169 to 172. Yes, so question number 1 is there, and that is the only question that is available for this one. Okay, let's see, let's read it, let's try to complete it. Okay, so we might be needing 2 to 3 sessions for this, but that's completely okay. Now let's jump into this. So this question is about insurance brokers company. Your firm is the auditor of insurance brokers company, which operates from a number of branches and provides insurance for the general public and businesses. The company obtains insurance from large insurance companies and takes a commission for its services. Okay, you have been asked to audit certain aspects of the company's tangible non-current assets. Okay, the company's main non-current assets comprise land and buildings, microcomputers, printers, and related equipment which are used by staff. Okay, then motor vehicles which are provided to directors and sales representatives who visit customers. Okay, now the company has been operating for a number of years and it maintains details of its office equipment and motor vehicles on a computerized asset register. That's amazing. The company uses the following depreciation rates. Sir, can we input certain points from our automated tools and techniques also? Yes, of course you can. There is no issue regarding that. Okay, now the following are the depreciation rates. Buildings 2% per annum on cost, office equipment 10% per annum on cost. So why so high? Because the useful life of office equipment is very less, right? Then motor vehicles 25% per annum on cost. You are concerned that the depreciation rate for the computers may be inadequate. Okay, so this is one concern that you might be having here. Okay, now list the audit procedures. List the audit procedures you would undertake in order to ascertain whether the following assets are owned. Okay, list the audit procedure you would undertake in order to ascertain whether the following assets are owned or not, right? So land and buildings, then computer and motor vehicles. How will you ensure that whether those assets are owned or not? Then let's read the other questions also. Question number 2 is, describe the audit procedures that you would perform in order to reach a conclusion on whether the depreciation rate of the computers is adequate or not. Amazing. And discuss the matters that you would consider when deciding whether to modify your audit opinion if you're not satisfied that the depreciation of computer is adequate. So discuss the matters we will be considering. How we will report is not asked. How will you, what matters will you consider? State with reasons what kind of modifications would be appropriate. Okay, let's jump into the first question first. List the audit procedures you would undertake in order to ascertain whether the following assets are owned. That is only rights and obligations. Okay, rights and obligation assertion is there. You can apply ICAI ORR all together. That is not an issue. Okay, so land building and computers and motor vehicles. Please take 2 to 3 minutes, draft your answer, then let me know once you are done. Yes, I hope the answer is done. So let's discuss about it. When we discuss about the land and buildings, what is more important to understand over here is that the ownership of land and buildings is decided by the title deeds. So what you can do is you can inspect the title deeds. A lot of times what could happen is that you might have taken the land and buildings on either loan, or you might have mortgaged it for some kind of loan, right? So in that case, the bank might be having the ownership, or bank might be having the document. So you will verify that, or you can obtain a confirmation from that particular bank that whether they have given the security, or they have taken that particular property as a security or not, right? These things are important. Then when we talk about computers and motor vehicles, so what we can understand over here is that for the opening balances, what we can do is we can do a physical verification also, we can obtain the title deeds also. But when we talk about the addition, so we have to talk about the yes, sorry, the other device was having the sound that I'm speaking on. Yes, so when we talk about the computers and vehicles, what we can do is for the additions we can verify the purchase invoices that could have been done. Okay, for the ownership part, we can also discuss about the registration documents, whether those registration documents are in our favor or not. So that's how we can verify the ownership. Let's go and read the answers. So inspect legal documents providing title for land and buildings. Okay, if deeds are held by the bank, review the bank report that we have discussed, and inspect invoices and cash payments supporting in respect of the buildings, which corroborates. It does not prove, but it corroborates the ownership. Then computers and motor vehicles, for all material additions during the year, inspect purchase invoices like we have discussed. For a sample of motor vehicles held at the beginning of the year, inspect vehicle registration documents like we have discussed, and physically inspect a sample of motor vehicles and computer equipment held at the beginning of the year and those items purchased during the year, that also we have discussed. Inspect invoices and cash payments supporting expenditure in respect of computers. It provides corroborative evidence but not the complete or conclusive evidence. See, evidences are of four types, right? Persuasive evidence, then conclusive evidence, then corroborative, and then contradictory. Now let's talk about the second point of the answer. The second question was, describe the audit procedures that you would perform in order to reach a conclusion on whether the depreciation rate of the computers is adequate or not. The audit procedure that we will be performing to ensure whether the depreciation rate of the computers is adequate or not. What is the depreciation rate? The 10%, the 10%, right? So whether that 10% per annum is appropriate or not. Should it be more? Should it be less? How will you consider that? So describe the audit procedures for that. Please take 2 to 3 minutes, draft your answer, then let me know. Please do not draft full answers, just write the phrases, and then we will discuss about it, and then we will read the answers also. Yes, hope it's done. So when we discuss about the audit procedures that we would be requiring in order to reach a conclusion on whether the depreciation rate of the computers is adequate or not, so we have to apply that ICAI ORR again. What we will inspect? So we will inspect the invoices or the amount that is generated on sale of any particular asset. So say if the profit or loss is substantial in every purchase or sale transaction or every resale transaction of the computers, then we can understand that in this particular case the depreciation charge is not correct, right? Because if every time the residual value is not matching the actual market value, then you are making some errors in the accounting estimate. So that is first point. Second point is you will be conducting the you will be taking the confirmation. So you can take a confirmation either from the management of the entity, or you can take a confirmation from an IT expert, the IT expert, okay, about the conditions and the useful life of that particular asset of those particular computer equipments. Then in analytical procedure, what you can do is you can compare the useful life that is used by this company along with the useful life that is used by the similar industries. Okay, then you can perform the inquiry procedure also. You can understand from the management of their procedure, of their method, to identify the useful life of a particular asset and a particular computer system. Then observation, what you can do is you can understand from the management and you can observe via their system whether the controls regarding the calculation of depreciation, regarding the residual value calculation, and the related procedures are working appropriately or not. You can recalculate the amount of gain or loss, or you can recalculate the amount of depreciation based on the data available. Okay, so all of that could be done. Now let's see. So discuss with management the policy for renewal and upgrading of customer of computers also. For example, if the company has a policy of renewing their computers every 3 years, then depreciation should not be 10%. It might be 33.33%, right? Then review profits or losses on disposals and scrapping of computers and related equipment. Inspect the offices for unused computers or printers. Items gathering dust may be obsolete and should be discussed with management that why the depreciation is not charged for them, why only 10% is sufficient for them. Select a sample of old computers from the asset register for physical verification. If not in use and no steps are being taken to sell, it would be prudent to assume they are worthless. So depreciation rate should be more and not 10%. Consider the age of the existing computers in use and effect of technological developments which would make them obsolete in the near future, and compare with depreciation rates being used for computers in the insurance industry by reviewing a sample of the relevant insurance company or broker published accounts. So do we need to write the exact words? No, the words that we have discussed, you can write it, don't worry about it. See why I'm being in such a slow speed for this particular audit procedures chapter is because a lot of students ask this particular question, that how do we write the answer for audit procedure. This is something that is asked for substantial marks also, and a student really fears that we do not want to lose the marks on this one. So that is why I'm being very slow in my approach over here. I'm trying to explain every pointer that is given over here, and I'm trying to understand your points as well. So whatever queries you face, please feel free to let me know on the chat box also. I'm continuously reading your chat box also. Okay, now let's jump to the third question. The second question is also done. Now let's jump to the third question. This question is done and this question is also done. Now let's discuss the matters that you would consider. Discuss the matters that you would consider. Matters you will consider, not the conclusion. Okay, matters you will consider when deciding whether to modify your audit opinion if you are not satisfied that the depreciation of the computers is adequate. State with reasons what kind of modification would be appropriate. So we have to give all the options. See, it is a 7 marks question. We have to give all the options, that what all possible implications could be there on the audit opinion, and what all possible outcomes could be there, and what opinions could be issued. So please take 2 to 3 minutes, draft all the answers, qualified, adverse, when adverse, when disclaimer, and so such answers. Yes, my dear friends. So what should be important here to note down is that we have been asked to discuss about the matters to be considered. So first thing that we'll be considering is the materiality, whether the transaction is material or not, whether the amount is material or not. That makes the whole difference. And then even if it is material, then how you can adjust it, as in how, what should be the criteria to discuss about how will you adjust it. So will you be taking it up prospectively? What would be the impact? Will you be revising the last year's financial statements also? We will be deciding all of that based on materiality. Now, when we discuss about the audit opinions, the impact on the audit opinion, so the more important point to understand over here is when we discuss about the audit opinion, so we are not just discussing about how will we write in the audit report. We also have to consider the impact of it. So for example, if the impact is material but pervasive, okay, material but and pervasive, so that is not possible in case of just depreciation issues, right? It could happen in case of tangible fixed asset but not in case of the depreciation issue only. So that possibility is cut. Now material but not pervasive, so in that case we will issue the qualified or subject for opinion or accept for opinion, right? Now when we talk about the point where it is immaterial, so we will issue unmodified opinion because audit opinion will not be modified based on that. Okay, so let's try to discuss about it. Let's see the answers here also. So the materiality of the understatement of the current year depreciation expenses in the context of total statement of financial position, the cost, accumulated depreciation, the depreciation expense and profit before tax. We will consider this to identify or to evaluate if it is material. We will consider this to evaluate materiality, whether materiality of depreciation. Okay, now if 20% is more appropriate than 10%, then the annual depreciation expense on computers should be double. If the useful life is now reduced, the life remaining will be much shorter, and this will further increase the depreciation expense. That is all that you should consider. As computers are just one of the asset categories, this might be immaterial also. Although depreciation is an estimate, possible prior period adjustment if the rate was clearly in error and the agreed amount of uncorrected misstatements is material. Now modification. When we talk about the modification, so the audit opinion should be qualified except for due to material misstatement, the effect on profit or loss for the period and carrying amount of non-current assets should be quantified. Alternatively, if the matter is not material or the directors adjust the financial statements to reflect more suitable useful life for computers, the audit opinion will be unmodified. This is very, very important for all of us to understand. Now, with this, we have completed the chapter number 22 of our syllabus, that is tangible fixed asset. Now we can jump to chapter number 23, which is audit procedures for inventory. Okay, now here we will be solving two questions, question number 1 and question number 3, because question number 1 and question number 2 are very, very similar. So question number 1 we will be solving in class, question number 2 will be your homework. If you face any trouble, please feel free to let me know, and then we will be solving question number 3 also. So let's read question number 1 here. Rocks Forever. You are the audit manager in DC and Company, an audit firm with 10 national offices. Oh my god, it's a big firm. Okay, one of your clients, Rocks Forever Company, purchases diamond jewelry from 3 manufacturers. The jewelry is then sold from Rocks Forever Company's 4 shops. Okay, so they obtain it from 3 shops and then they sell it in 4 shops. Okay, this is DC's and company's only client in the diamond industry. Okay, you are planning to attend the year and physical inventory count for Rocks Forever Company. Inventory is the largest account balance on the statement of financial position, with each of the 4 shops holding material amounts. Okay, due to the high value of the inventory, all shops will be visited and test counts performed. Okay, due to the high value of the inventory, all shops will be visited and test counts will be performed. Okay, and this is the only client in diamond industry, so we do not have a reference also. Okay, with the permission of the directors of Rocks Forever Company, you have engaged Ujay, a firm of specialist diamond valuers, who will also attend. Ujay will verify, so experts are also going to attend. Okay, now Ujay will verify that the jewelry is in fact made from diamonds and that the jewelry is saleable with respect to current trends in fashion. Okay, so NRV will also be judged over here. UJ will also suggest on a sample basis the value of specific items of jewelry that we are required to do. Now, counting will be carried out by shop staff in teams of 2 using pre-numbered count sheet. So, in case of observation, the similar thing happens, that they count it, you only observe it. Now, list and explain the reason for the audit procedure used in obtaining evidence in relation to the inventory count of inventory held in shops. Okay, list and explain the reason for the audit procedure used. So all these audit procedures that are used, what is the reason for it? Then question number B is explain the factors you should consider regarding the work of OJ. Okay, then describe the audit procedure you should perform to obtain assurance about the valuation of jewelry inventory. Okay, that's it. So let's complete the first answer first. List and explain the reason for the audit procedures used in obtaining evidence in relation to the inventory count of inventory held in the shops. Please pause this video if you are watching it in the recorded mode, and for the live students, I would suggest that you please take 2 to 3 minutes, write this particular answer, then we will meet again to discuss part A only. For now, part A only, then part B and part C. Okay. Yes, guys, hope it's done. So when we discuss about the list and explain the reasons for audit procedure, so we should not miss out on this point, list and then explain. That is, we have to create a column where we have to write the audit procedures in one column and then reason of performing that procedure first. Okay, so when we talk about the list and explain the reason for the audit procedure used in obtaining evidence in relation to the inventory count of inventory held in the shops. So what we have to do is we have to first of all write all the audit procedures that we will be performing in relation to the inventory count and then the reason of performing that. So let me give you certain examples. Okay, when we talk about the inventory count, we will be selecting certain samples for which we might be doing a sheet, ledger to sheet decode. That is, we will be selecting certain items from the ledger and then we will be going on the ground and we might be recalculating it based on us, based on our understanding, right? That could be one procedure. We might be observing the inventory count that is being done by the management. That could be second procedure. Now, why we are doing the first procedure? That is why we are selecting certain sample and then we are checking it at the ground, just to ensure that whatever amount, whatever quantity is being presented at the ledger, whether that matches with the ground or not. Then we will be doing a observation just to ensure that whether the counting procedure is being performed appropriately or not. Then we might be doing a third procedure also, that we might be taking some random samples from the ground and we might be matching with the ledger that whether this particular item is present in the ledger also or not, and then whether the amount matches or not. So that is very, very important. Why this particular procedure? To ensure that whether everything what is mentioned in the ground, what is present in the ground, whether that is shown in the sheet or not. So these are addressing different risks. So perform an overall review with client staff and ensure that they are following the client's physical count instruction. Specifically ensure that inventory is divided into appropriate sectors for recording. Then staffs are counting in pairs only. Then appropriate checks are in place to ensure that each item of jewelry is only counted once. The shop is closed during the count so that there is no movement. Count sheets are pre-numbered. Okay. Now, why this particular procedure? It confirms a clear layout of inventory, ensuring items are not missed, prevents collusion, and provides a check over security of inventory. Check to ensure that inventory is not double counted and to ensure that there is no confusion regarding items which are sold and to ensure that no count sheets are lost. Now, obtain a sample of inventory items already recorded on the inventory sheets and agree to the jewelry inventory. What is the meaning of this? Obtain a sample of inventory items already recorded on the inventory sheets and agree to the jewelry inventory. That is, select certain items from the ledger and then match it with the ground reality. Check to ensure that inventory recorded on inventory sheets actually exist. Then for a sample of jewelry in the shop, agree to count sheets. That is, take certain samples from the shop floor and then check that whether it is present in the ledger also. Check to ensure that all inventory is recorded on the inventory sheets or not. Obtain a sample of count sheets, photocopy and place on the audit file also, that this is how the count has been done by the management. This is the proof that we have taken. To check that details on the count sheets are not amended after the physical count. Check all count sheets are returned after the physical inventory count. Ensure that all the sheets are accounted for and inventory is therefore not understated, and then we will be doing a pre-numbered analysis also. So do we need to write these many procedures only? No, the answer was of 5 marks, so 10 marks, so you can write 5 points. Okay, 5 points, 1 marks each for audit procedure, 1 marks each for the reasoning. Now, obtain last inventory receipt note and sales invoice numbers. Review the condition of the jewelry with independent valuer. Ensure that there are no reasons why the inventory could be obsolete. So to check that any inventory which is damaged or unsellable is correctly valued. Form an opinion regarding the overall accuracy of the physical count to confirm that inventory quantities have been correctly recorded or not. All of these things are very, very important. Now let's jump to the second part of the question number B, which is explain the factors you should consider regarding the work of OJ, which is an expert. My dear friends, you do not need the timing to write this answer. It is competency, objectivity, independence, whether they are qualified or not, right? All of these points. So let's discuss about it. So the need for an audit expert should be confirmed, given that Rocks Forever Company's DCN company's only client in the diamond industry. Some assistance would be expected as valuing diamonds is a specialist activity. OJ must have relevant experience, whether they have the relevant experience or not. Need should be evaluated whether it is actually needed or not. Okay. Then OJ should be a member, whether they are the member of an appropriate professional body or registered valuer or not. Okay. Whether OJ follows relevant ethical standards or not. The nature, scope and objectives of OJ's work. Then OJ's report will need to be evaluated for reasonableness and relevance, whether the report that is submitted by OJ is relevant and reasonable or not. Okay. Now, the third point. This was 5 marks. You have written 5 points. That's it. Now, the last question. Describe the audit procedures you should perform to obtain assurance about the valuation of jewelry inventory. Now, my dear friends, the assertion is given to you, you should just apply ICAIORR as much as possible, not all points, as much as possible on the valuation assertion. See, when the assertion is not mentioned, you can mention any point for any assertion, but when the valuation assertion is mentioned, so you should only write the points that is there for valuation. ICAIORR is the way through which you can reach the valuation assertion. So please draft your answers for this one. Please take 3 to 4 minutes, draft your answer peacefully, and then let me know. Yes, hope it's done. So the third question is, describe the audit procedure you should perform to obtain assurance about the valuation. So before we do that, let's try to understand what were the procedure that the expert has performed. Okay, due to the high value of inventory, all shops will be visited and test count will be performed. So we will first of all check that whether all shops have been covered or not as per the audit planning, whether all shops have been covered or not, and if they have been covered, whether relevant documents, whether relevant evidences have been taken or not, right? Then UJ, a firm of specialist diamond values, will also attend. UJ will verify that the jewelry is in fact made from diamonds and that the jewelry is saleable with respect to current trends in fashion or not. So we will obtain a confirmation, not confirmation in terms of external confirmation, but a assertion from a assertive sentence from Ujay that whether the inventory is in good condition or not, we will rely on their report. Plus, we will be understanding whether that is in sellable condition, sellable quality, sellable pattern as per the latest trends also. And then we will also be obtaining the report, because it is written over here that Ujay will also suggest on a sample basis the value of a specific item. So we will obtain that report and we will match with the company's data that whether that valuation is matching or not, and we will inquire for any discrepancies. And counting will be carried out by shop staff in teams of 2 pre-numbered count sheets. So we will be taking certain samples from the ground and we will be discussing it with the expert along with the sheet, that whether that amount is correct or not. Plus, if any item has been sold after the year end, on the date of the count or later on than that, before the date of the audit, we will be discussing about what was the value and what is the actual value of sale, whether that is matching or not. Okay, let's discuss about it. So for a sample of jewelry on the final inventory sheet, trace the cost of trace the cost of those items to the original purchase invoices also. Then for jewelry sold after the reporting date, check a sample of sales invoice back to the final inventory sheets, ensuring that the sales value exceeds the cost. Then review Ujay's report for confirmation that diamonds are genuine or not. Then where an item has been in the inventory for a long time, check the values report and consider whether any allowance or provision is required or not. So all of these points are very basic points and you will be able to write it. I'm very sure about it. Now second question, my dear friends, is a pure homework question. Okay. It's a very simple question, very direct question. So you should solve it at your end. Just in case you face any trouble, any understanding issue, please feel free to let me know. I would be happy to assist you over here. Now what we can do is we can go for question number 3. We can go for question number 3. Sir, question number 3 is also very big, right? But my dear friends, this is an important question. So it is very much required for us to solve it right now. Now, Misty Reed Company. Okay. You are an audit manager in Ron and Con, one of your audit clients. Misty Reed Company is a specialist supplier of crime fiction with over 120,000 customers. Okay. Okay. Now the company owns one large warehouse which contains at any one time about 1 million books of up to 80,000 different titles. Oh my god. Okay. Well, 1,20,000 customers, one large warehouse, 80,000 different titles. Okay. Customers place orders for books either over the internet or by mail order. Books are dispatched on the day of the receipt of the order. Returns are allowed up to 30 days from the dispatch date, provided the books look new and unread. Okay. Books are dispatched on the day of the receipt of the order. Returns are allowed up to 30 days. So after delivery, 30-day return policy is there. Okay. But there's a condition that the book should look new and unread. Due to the high inventory turnover, Mystery Read maintains a perpetual inventory system using standard off-the-shelf software. Okay. High inventory turnover is there, so Mystery Read maintains a perpetual inventory system using standard off the shelf. Perpetual inventory system you must have discussed in FR, right? Now, Ron and Con has audited the system for the last 5 years and has found no errors within the software. Okay, no errors in last 5 years. Continuous inventory checking is carried out by Mystery Read's internal audit department. Okay, so the company is also getting the internal audit done. You are currently reviewing the continuous inventory checking system with an audit junior. Okay, the junior needs experience in auditing continuous inventory checking system. See, this is a perpetual system. So although I have said that must have discussed in FR, perpetual system is what? It is not a fixed period system. Perpetual system as in the books and the inventory cost are continuously being recorded on a regular basis. Now describe 3 advantages to Mystery Read Company of using a perpetual inventory system rather than a periodic system. Okay. Then list the audit procedure you should perform to confirm the accuracy of the continuous inventory checking at Mystery Read Company. For each procedure, explain the reason for carrying out procedure. Then during your preliminary audit planning, you note that the engagement letter has been returned unsigned by the directors of Mystery Read. When asked to explain their action, the directors indicate that they cannot allow you to access to information on the company's new website development as this contains various trade secrets. You will not therefore be able to perform audit procedures on the research and development expenditure incurred on the website and included in non-current assets. Briefly explain the actions you should take as a result of the directors not signing the engagement letter. So please try to solve question number A and B first, and then we will be taking another break when we will be solving question number C. So question number A and B first. Okay, 3 advantages of using perpetual system. That is a very direct question, not related to case study. And then list the audit procedure you should perform to confirm the accuracy of the continuous inventory checking. But since here also Mystery Read Company is written, so it would be better that you give your answer related to the case study only. Please take 5 minutes, draft your answer for these 2, and then let me know once your answer is done. Okay. Yes, so let's discuss about it. When we discuss about the perpetual system, please try to understand that all the negative pointers of the fixed period or the periodic system of inventory valuation or inventory management becomes the advantages here. Okay, so when we talk about the advantages, number one is that there is no requirement of a stoppage on an annual basis just to discuss about the counting, the profit and loss, the cost of goods sold. No, there's no such requirement because the inventory would be perpetually valued, perpetually it would be recorded, right? Second thing is that the management becomes very easier because the reordering becomes very easier with the perpetual system rather than a periodic system, because at the end you will get to know the data. Then when we talk about a perpetual system, what we need to understand over here is that the reporting, which is one very important part of the compliance, also nuclear also, that also becomes very easier. Okay, now let's discuss about the answer to this one first, then we will be jumping on the next one. So the disruption that would be caused by an annual inventory count dispatches would have to be suspended on the day of a full count is avoided. Then more accurate and regular inventory counting enables errors and slow moving or damaged inventory to be identified earlier. Knowing actual inventory balances at any time facilitates reordering of best selling books. There will also be fewer causes of zero inventory. That would mean that orders cannot be fulfilled. Increased control over storekeeping should decrease the risk of theft. The external audit fee is likely to be lower if Ron and Con company can rely on the operating effectiveness. Then when we talk about the second question, what is the second question here? The second question is, list the audit procedure you should perform to confirm the accuracy of the continuous inventory checking at mystery deed company. For each procedure, explain the reason for carrying out that procedure. Okay, list the audit procedure that you should perform to confirm the accuracy of the continuous inventory checking system. So when we talk about the audit procedure, so it starts with understanding, that is discuss with the internal audit. The procedure is carried out and review the department's working papers. For any errors identified, ensure that appropriate adjustments were made to the perpetual inventory system. Then visit the warehouse and select a sample of inventory items already recorded on the perpetual inventory system and agree to the book inventory whether the quantity and the value is appropriate or not. For a sample of book titles in the warehouse, agree physical quantities through the perpetual inventory system. Same points that we have already discussed. Review the conditions of the books, taking details of which appear to be old or damaged, and ensure all inventory lines are counted at least once per year in discussion and draw conclusion on the overall accuracy. See, all of these points are exactly similar to what we have already covered about it, right? Now, when we talk about during the third question, during your preliminary audit planning, you know that the engagement letter has been returned unsigned by the directors, right? And you have also ensured that you will not be able to take any audit procedures for the research and development cost. So what will be the effect of this particular point? So what would be the effect? Discuss the matter again with the directors in an attempt to reach a suitable compromise. Understand their reasons also, just what happens in case of management representation letter also that we have discussed. Remind the directors that statutory audits require directors to make all the necessary information and explanation available to the auditor, otherwise the report could be modified also. Then explain that lack of information on the website will result in a limitation in the scope of the audit work and auditor might be required to resign also. Further explain that because of the lack of evidence appears to relate to a material amount that the audit opinion will have to be modified within except for qualification. And finally note that the auditor may have to decline to continue to act for the misread unless suitable terms of engagement can be agreed. With this, we have covered chapter number 23 also, my dear friends. Now, if you like this particular session, hit the like button, and if you want to see more of it, do subscribe to the channel. We will be bringing newer videos for all of you. All the very best. See you in the next session of audit procedure, where we will be covering chapter number 24, 25, 26 and 27. Thank you so much.